A few weeks back, you might have remembered that Chrystia Freeland, our finance minister, was tweeting an article from IMF saying that Canada has the lowest net debt to GDP compared to G7 countries. And when I looked at that, I was kind of confused that how is it possible, because I was reading about this for quite some time and I know that Canada has a rising debt issue and Canada's government is running massive fiscal deficit, which is actually going to hurt Canadians in the form of taxes and inflation. Okay, so I know that this is a problem, but when I looked at this statement from IMF saying that Canada has the lowest net debt to GDP compared to G7 countries, this was quite a bit of a head scratcher for me. And I was looking for some clues and I found this comparative study from Fraser Institute. And if you don't follow Fraser Institute, you're missing a lot of good insights from this team. So they actually published a very good comparative study between different metrics when you compare or measure the debt to GDP. Okay, so what IMF is saying that Canada has net debt to GDP. So the key word here is net. So net means they're actually deducting assets. And what's unique is about Canada is Canada has pension plans like CPP and QPP. They don't invest locally. So they buy foreign assets like foreign equities and foreign bonds on their balance sheet. So when you calculate overall net debt from a government level, okay, then you deduct these assets from it. Okay, and because the Canadian pension plans are not invested locally, there is no corresponding offsetting liability within the books. So this actually reduced the overall debt level down when you compare CPP and QPP altogether. Versus other countries, their pension plans are invested locally. For example, if you talk about US has Social Security plan. That plan is invested locally and they purchased government treasuries and they keep them on their books. So when you calculate the overall debt, the net debt, you actually have from a pension plan perspective, they have assets, but from a government perspective, it's a liability. So it offsets each other. So the net effect is zero. Okay, so but in Canada, there is no corresponding liability within the books of Canadian government. So from their angle, CPP and QPP are assets. Okay, so by doing that, it's an accounting gimmick. Okay, by doing that, you bring the overall debt level down by, let's say, $1 trillion. By doing that, it's an accounting gimmick, right? So by doing that, you actually bring the overall debt, the net debt, down by a significant level. So when you plot this against G7 countries, for sure Canada ranks 5th on that scale, because Canada has much lower net debt to GDP compared to other countries. But the other countries have an offsetting liability for their pension plans. Canada doesn't have this, and because of that, Canada's debt to GDP looks much better compared to the G7 countries. But if you consider the gross debt to GDP, which includes pretty much every debt at government level, provincial, federal, territorial, municipality, and when you compare this metric against the other G7 or OECD countries, then Canada's rank dropped from 5th to 26th. And this is where we see a big difference in terms of how government can pick and choose these metrics to make their data looks much better compared to what we can see how Canada's debt level should be compared at. Okay, so it was funny to kind of point this out, and I wanted to share with you that how government is kind of cherry picking the data and making it look like much better for you so that you can keep voting them, but in reality it's not that great. And when you look at the gross debt to GDP, Canada has much higher level compared to G7 or OECD countries, and that debt level is growing, right? Even from a finance minister's own plan, the projection is keep pushing down to 2028 time frame when it may come down to its balanced state. But who knows? They are keep running fiscal deficits, and in order to bring the balance down, either they have to cut spending or they have to raise taxes, and they are not slow down the spending, but they're raising taxes. So Canadians, be prepared for more taxes in the future, or you start pushing back on government new tax plans so that they don't end up stealing more money from you for the massive mismanagement on their side. Anyway, you let me know what you think about that. Put your comments down below and check the links in the description. There's some free stuff available for you. Let me know what you think about that, and I'll see you in my next video. Bye. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.